Hello, everyone. This is Miss Renee, Miss Notary Consultant, and I am super excited to share week 2 of the Notary Business Taxation Marathon, year-end marathon. It was no other way for me to just share my love, share my knowledge, and collaborate with other people. So it's just best to see how are we in the month of November to truly focus on our notary journey. And no one really liked to talk about taxation, right? People don't like them talk about counting. Absolutely not. But I have met a tremendous guy, right? Who's going to tell us how he got started, right? He is known as self-employment tax guy. Did you hear us? Self-employment tax guy. So he knows everything about self-employment tax. And I think one of the biggest thing is home-based office, right? How do we write it off and how don't we get red flag? So I'm gonna let him talk all about it. But first, let's introduce you. Who are you to the notary community?
I appreciate that. I wouldn't say I know everything in taxes, but for the notary community, my name is Tyrone Gregory, and also known as the self-employed tax guy. And for those who follow me on social media, also known as your favorite uncle cousin, right? And I'm here to provide as much assistance to help people become successfully self-employed any way possible. So I'm here.
Excellent. So tell us a little bit about your journey. Like how did you become an expert, right? Like why self-employment?
My journey, man, I don't know how much time we got. Right? I'm gonna give the summary version, right? I've always loved construction. I started off in construction, had my own construction business, love working with my hands. So when I got married, my wife was like, "Had you filed your taxes, right?" And this was way before I was even into taxes, and I was like, yeah, sure. I did my taxes and all this stuff, lying to my wife in the first year of marriage, but I didn't. I hadn't filed my taxes in 4 years, so she wanted me to get my stuff together. And I'm like, all right, fine. Let me get my finances in order. Filed my taxes, and we immediately got audited. Right, it turned into a nightmare. Had to do all this reconciliation, proving this, proving that. And so I told my wife, I was like, well, before we go through this nightmare again, I'll learn how to do this myself because apparently there was so many things as a business owner I did not know. So I enrolled into a tax course here locally, took the course, and just fell in love with it because as I'm going through this course, learning about taxation, realizing that as a small business owner, a minority business owner, there were so many things that was not taught to me. There were so many conversations that I didn't have in my immediate circle about understanding how taxes is, how it works, and how to save money, avoiding what I just went through. And then that completely changed the trajectory because I left the construction industry, gave the business over to my family members, and I went full head on into taxes. And here I am 13 years later, still in the game.
Wow.
Yeah,
So you probably know all the red flags. You probably know what to avoid and everything because you
absolutely.
overcame an audit from the
Absolutely.
IRS. Absolutely. Tongue
Yeah.
twist. All
Well,
right.
so I mean, there are red flags, right? And I'm glad that you're putting this platform out there, right? Because one of the things about taxation is it's scary. A lot of people fear the IRS because of what we see in social media, because of what we hear on the news, right? Like the biggest gangster in the world, Al Capone, the feds couldn't take him down, the law enforcement didn't take him down, but guess who did? The IRS, right? So everybody has this negative connotation surrounding the IRS and they're afraid to do things, which was kind of my thing, right? Like in the beginning, I said, I didn't file my taxes. I didn't want to. I didn't know how. I didn't want to even touch a tax return. So learning this, yeah, I learned what's considered a red flag, but I also learned that, the IRS, they're teddy bears, right? The goal of the IRS is to have you at a zero. They don't want to have you owing them anything, and they don't want to owe you nothing. They want you really to be at a zero. Let's do what we need to do so everybody is in balance. But because we are unaware of what we can and cannot do, that's where we get these nightmare scenarios coming in at. But what you're doing here, providing that education to the people, to the community, helping them overcome that, that's going to help them reach what I like to call the perfect tax return, where you don't owe them, they don't owe you. You pay what you were supposed to, and now you have a lot more capital to work with to grow and scale your company.
Wow. Wow.
Yeah.
I really like how you put that. You're saying a zero, right?
Yeah.
Where you don't owe them, they don't owe you, and you can put that money back into the capital of your notary business. So
Absolutely.
well
Absolutely.
said. Well said. So what do you got us? What you got to tell us a little bit about this scary tax deduction? Okay, home-based office. It may not be that scary because of the pandemic, but prior to the pandemic, it was really, really scary,
It
right?
was.
To claim that. So, what's the first couple steps that we should be aware of, especially if we're not tax professionals, but as a business owner, it's very important for us to really know what's going on. Because
Absolutely.
just sharing a little bit about the PPP, I helped $1.3 million go to notaries, and it was
That's
about
good.
153 notaries, right?
That's good,
I
man.
partnered
We got to give you a
with a
shout out.
lender. Yeah, we partnered with a lender and everything, right? Thank you so
Right.
much. But the point, what I'm trying to say, as reviewing a lot of notary tax return, they didn't even know that their tax professional, EA, CPA, whomever, did not report all the income that they said.
Man,
So the
that's
minimum was 5,000. They'd be like, they'd report 4,000. And they were like, well, no, I made about $10,000. But when you
mm,
look at their Schedule C, is only four. So in this process, I see that a lot, right? I see
mm.
that they trust them, they give them everything, but they don't review it, right? They don't really have the knowledge. And
That's
that's the
key
whole
right
point of
there.
this marathon. It's just to kind of not maybe be our own taxes, right? But to be aware.
Absolutely. Absolutely. That's key right there, right? Like I tell my clients, and even those who aren't my clients, there is, if you look at the bottom, the very bottom of your tax return, there's a very small print that says, under penalty of perjury, you agree that what is on this tax return is accurate and true to the best of your knowledge. It says nothing about your tax preparer, your CPA, your enrolled agent. It says you agree. So it is of the utmost importance that you always review your tax returns, right? And like I said, and Renee putting this information on for the community. I get some people don't know what to look for, so they don't review it. But now you have people like Renee giving you that information. So even if you've discovered something new in any of these sections that she's putting on, you can go back up to 3 years and look at your tax return and say, okay, I learned something new. Was that on the previous year's tax return? And if it wasn't, you can amend it and go back and get the benefit of it up to 3 years.
Absolutely. And
Yeah.
for those of you, I'm just pulling it up, the screen of exactly what he said, right? So if you really can look on a 1040, it pretty much states that, right? Under
Yeah.
penalty of law. So it's our responsibility to make sure that we know what we are signing, or we giving that person the ability to sign, because right there where it's highlighted, it says that. So
Yeah.
good pointer, good pointer. I'm super excited.
Absolutely. Absolutely. And as far as what we're talking about, writing things off, I'm gonna say this right here, right? Don't freak out. That's the key thing. Whatever you do, don't freak out. Right, just a little camera trick right there.
I like that. I need to get a camera trick.
But especially because there are certain things, right? Like, so when we talking about the home base office deduction, it being a red flag, at one point in time, the only reason, and here's where I say the fear of it all, the only reason it was considered a red flag or something scary, because people were abusing it, especially
Mm.
the network marketing people who wanted you to join their team so they can create these, so they can have people under their belt. One of the biggest, I don't know, unicorn type things they would use, right? And say, hey, if you work for me, you can now write off your mortgage. You can now write off your rent. You have a home-based business, and you now can write all these things off and save all this money. And so they spend it in such a way where it seemed so magnificent, and you can do all these great things. And so people were doing that, but they were doing it the wrong way. not knowing what the rules were. And then the IRS was coming to these people saying, hey, that's not how you do it. So then people became afraid of it. But here's the
Mm,
thing, as long as you're doing it the right way and you're following the rules, which is very simple, right? There's nothing to worry about. Absolutely nothing to worry about.
no, that's amazing. That's definitely amazing. I just wanted to share in the screen we have exactly where you can find that information at. Okay.
Yeah, yeah. It's literally right there where you sign at, right? But we really don't pay attention to where we just
We don't.
somebody says sign here, and that's what we do. We sign and we bought our business. But yeah, I'm glad you put that on the screen because that's exactly what it says that we're responsible. We are responsible as the actual preparer, or not preparer, but person on that return. So read it, make sure we good to go.
Right. So, what would you say? You gave us the history of
Mhm.
kind of why it was a red flag, right? The history of why people were scared of it, and um, who's Uncle Sam, right? Let's kind of narrow down into home-based offices. Why should we take this credit, right? And how does it really benefit our taxes, right? And what do we have to do to get it?
All right. Well, the first thing, the reason why you want to take it, when we look at our taxes, the goal, like when I said in the very beginning, your goal of your tax return is to be at zero. You don't want to owe them anything. You don't want them owing you anything, right? Because if we look at that from a business perspective, I know we as a culture, we as a people, we love getting refunds. We look at it as free money. Well, in business, if you're getting a refund, there's something seriously wrong with your finances, right? Because that means you've overpaid somebody, a vendor, the government in this case, money that you shouldn't have. That's money that you could have used for your business, for expansion, for growth, for payroll, for marketing, for whatever that the government held on to the end of the year and gave it back to you, right? That's what a refund represents in business. So when we look at that and the home-based deduction, the goal is to help us achieve that zero balance tax return. And so what the home-based business deduction is just that. It's an deduction. It's an amount that you are legally allowed to use to reduce your gross profits, thereby reducing your tax income, your taxable income, thereby reducing your tax. Again, the goal is to get to a zero tax return, and you use this deduction to achieve that. Okay. Oh, I see this facial expression. What's that? Oh, did I lose? I think I can't hear
So
you.
why no? So why do I need it? You just told me why I should do it. You told me why I need it. So what do I need to prepare for
That's
this?
a good question, right? And so here is where I do believe the fear comes in there. So we're gonna go ahead and try to diminish this fear. Record keeping. One, to have a home-based businesses, there's if you read the or if you listen to what people say, they'll tell you there's two rules, but there's actually three. The main two rules to using a home-based business deduction is you must use it exclusively and regularly, right? That's if we
Oh,
look at how do I get it? Why do I need it? There's only two rules. Well, I'm gonna say technically three, but the main two is exclusive use, regular use, and then the third one is the principal place of business. And let me kind of break that down. So to qualify to write things off, which is again what we can write off is going to be if you're a homeowner, you get to write off the mortgage, in the mortgage interest. We can't write off the principal. You get to write off the mortgage interest, property taxes, the insurance that you pay, utilities, and things of that nature. Now it's not 100%, right? Because you're not using 100% of your home for business. So therefore, it's going to be based on the percentage. All right. So knowing that, let's start with this exclusive use. So you have your home, right? And then you use, say, a room in your home. You've completely dedicated that space for use of your business. You turn the room, you put a desk in there, you have your computers in there, you have everything you're working from in that room. That's exclusive. That room is not used for anything else except for business purposes. Okay. You're using it, and business purposes meaning, administrative work, doing bookkeeping, doing, scheduling and all that stuff. That's pretty much anything of that nature that's considered business use of that area. And so as long as nothing else happens in that area, it's considered exclusive use. Okay. So as long as you qualify that, you're good. Regular use, meaning that you're using it on a regular basis, right? Like you would if you had an actual office that you would go to. The only thing about regular use is there's nothing in the law as of this conversation. There's nothing in the law that says regular use is 8 hours or regular use is 4 hours. So there's nothing written in the law. Therefore, everything is all going to come down to facts and circumstances, right? So nothing that you have to have definitively, nothing that you have to say, oh, I must go here for, a set amount of time, right? Because there's nothing in the law that says that. Facts and circumstances. So once you have the exclusive use and the regular use, you're good to go. And then there's the principal place of business, meaning that you don't have a separate office space that you do work out of. Like, for example, this is my actual office. Or like I have an actual office that I come to work every day. So therefore, I can't say that I have working from home because this is my principal place of business. So I can't do both. They don't let you do both. It's one or the other. So as long as those three things are utilized, again, exclusive use, meaning nothing else happens in that area. Regular use, meaning, again, that's on you. There's nothing in the law that says it has to be a set amount of times. But for your situation, if you can say this is what I regularly do, if you spend an hour a day and that's your regular vocation, then that works, right? That's your regular use, then you're good. And then again, you have no other place of business that you go to. And I'm going to assume, and correct me if I'm wrong, but as mobile notaries, most don't have an actual office unless they have a staff or something like that. So I'm gonna say most majority would work from home. So they automatically fit the profile to be able to use this underutilized deduction. And again, so let me track back. I want to give an example because I know exclusive, I said nothing else happens in there, but just to kind of give an example, let's say, for example, you have a den that you've dedicated as your office space. But if the family also watches TV and plays games in that den, then the exclusive use goes out the window, right? Because now there's mixed use in that area. And once you lose the exclusive use, then you no longer get to qualify to use the business use of home. So just be mindful of that.
No, absolutely. I love the fact that you brought like the 3 steps, right?
Yeah.
To make sure to see if it is beneficial for you, right?
Absolutely.
The underused tax deduction, right?
Mm-hmm.
Exclusive use, regular use, and no other place of business. You can't be renting out an office, right? But then say, hey, well, I did some of that during 2020 when I couldn't go to the office, right? You can't double dip, right?
Well, I mean, you know what? They don't like you to double dip, but 2020 brought on a whole new kind of set of circumstances. Like if you wasn't able to go into your office, if the office was closed down and you wasn't able to access it and you had to work from home, then you absolutely have that right to, but you would have to prorate it. Right. So you would say, you know what, I went to the office for 6 months and I worked at home for 6 months. So I'm only going to use 6 months worth of, I'm only going to write off 6 months worth of mortgage interest, 6 months worth of insurance, or 6 months of the rent. If you're trying to write off the whole year, then that's where you can see yourself getting into some trouble. But again, because again, the IRS, they just want honesty, right? You can have a home office and home base, but you can't write them both off at the same time. So if you had 6 months on, 6 months off, do a split down the middle. and go from that way. But still, again, planning and knowing, just make sure that you do it. Don't not write it off because you did work from your office, because that means you're leaving money on the table. And that's what you don't want to do as a business. You want every dime you can get. Don't leave no money on the table.
So one of the questions is like, what if I just started my notary business, right? Right in the heart of the pandemic, right?
Mhm.
Of let's just say 2021. I started maybe July or May. So at that moment, I should make sure that my record keeping starts at that moment, not for
Absolutely.
12 months, right?
Absolutely.
Because
Yeah.
just a clarification, because a lot of notaries like, oh my God, I can write off the whole year. No, that's not one of the things that you can do. So
No. Yeah.
making sure that we understand just the foundations that business owner to also refer that to other business owner. Did you know that the moment that you started? So do I need it to make income at that moment to write it off?
That's another thing we want to talk about. So there are limits, right, to the amount of the home office deduction that you can write off, and the limits is going to be limited to your gross income minus your expenses. So if you have more income than you do expenses, say for example, let's just use round numbers. If you made $100,000 in your notary business and you wrote off 25,000 worth of expenses, then you have a $75,000 profit, right? So if that's the case, then you have up to 75,000 to write off using your business home expenses, because the business use of home, if we look at a Schedule C, it is the last deduction on the Schedule C because it's going to take into account everything that happens beforehand, right? So as long as you have profit, whatever that profit is, then that's the amount that you can take up to the business deduction. On the other hand, if it's the opposite, if you have a loss on your income, then you won't be able to take as much of your business deduction for your home office because it would be limited only to the amount that you made, or it'd be limited to certain things that you'll be able to take anyway. So if there is a loss on the Schedule C, and I see you have the Schedule C up there, if there is a loss on the Schedule C, then your business home use deduction is going to be limited to only mortgage interest, property taxes, and insurance. So for somebody who's a renter and they take a loss, then they lose out on the home office deduction altogether.
Okay, say that one more time. Say it. I don't think people got that one. That was too deep. That's
Well,
too deep.
so let's break down. So again, because you have the Schedule C up there, so we can see line 30. Now we notice line 30 comes after line 29, which is the tentative profit or loss, right? And that's there specifically for a reason, because if line 29 is a positive number, then line 30 can be up to whatever that number is positively, right? So if line 29 is 20,000, then line 30 can be up to 20,000. On the opposite end, if line 29 is, let's say, negative 3,000, then, and this is where it splits, if you are a homeowner, then line 30 is going to be limited to the mortgage interest, the property taxes, and the insurance and depreciation, right? Depreciation taken last. So it's going to be limited to that you write off, versus if line 29 is a negative number and you are a renter, then line 30 is going to be zero.
Mm.
However, you can carry it forward though. And this is another thing. Just because it's zero now, that does not mean don't do it. You do it anyway because you can carry it forward into a year where you actually do have a profit and it will be able to be deducted then. And that's where we go wrong a lot of time. We like, well, that ain't gonna benefit me anyway, so I ain't gonna take it right now. No, that's how the wealthy win. They take their losses and they carry them forward to the years where they have profits. And that's why we be like, man, why they make this money and they ain't pay no taxes? That's because they carried their losses with them and used them when it made sense to do so. So again, I just want to make sure I make that clear. Just because it may not benefit you in the current year doesn't mean you shouldn't file it, do it anyway, and take it with you so you can use it when it is beneficial.
No, that's deep. We got some people saying this. I'm gonna have to replay this because the information is so valuable.
Absolutely, absolutely, absolutely. Man, glad I can be here.
Absolutely, absolutely. So we do have a question real quick, just to kind of stay on the same topic. It says, so if you have an office but
Mhm.
work part-time from your home office and you begin your business in May, for example, what can you deduct?
So run it back to me. So we have an office, meaning a separate location office, or are we talking about a home office?
No, so if you have an office but
Okay.
work part-time from home, you began your business, let's just say May, what can you deduct?
So that's that scenario. So is the office, even though you're working part time from home, is the office the principal place of business? Like, is that where majority of the work gets done? Because if the answer is yes to that, the home office there isn't anything to deduct, and we can't
Mm,
do both, right? We can't double dip. It would have to be a scenario where, yeah, I had this office, but then in May, my office got shut down. I can no longer work there. So now I got
COVID.
forced to work from home. So now from May until December or whenever I go back to my office, I'm going to write those expenses off because I was there. I couldn't use the office here.
That
And
makes
it
so
still
much
may
sense.
be a case now, you still may be paying rent to this office because you want to keep it. You want to go eventually go back to it. So yeah, still deduct the leasing amount that you're paying over there. But now you also get to use business use of home because that's now your principal place of business.
No, I think the clarification was my physical office and my car are my offices, but I do work from home. So let me just kind of clue you in. So in being a loan signing agent, right? We got
Mhm.
to print on demand. Like it's like documents just got it. The appointment's at 2 o'clock. We just received the document at 1 o'clock, and it's 30 minutes away.
Oh,
So
wait.
we have a lot of offices, what we call mobile offices, right? Where we have our computer in it, like literally the whole trunk is
Okay.
printer, scanner, and all of that, right? So, what the question I think was my physical office and my car are my offices, right? But I think that's a clarification. Um, some people, can I write off my car, right? Because it's my office?
Absolutely. I mean, I know we're not talking about vehicle deductions, but if you are a mobile notary, your car is most likely going to be your biggest keyword free deduction. And I say free because the mileage that you get to write off, you're technically not spending money for that, but you still get to write it off. You know what I'm saying? So that is probably the biggest deduction that as a tax preparer, I see a lot of people missing. They guess at it. Oh, I
Mm,
think they look up at the ceiling. They look. I don't know. Like there's magical numbers on the ceiling tile, and they give a random number. But that could be less than what you actually did.
right.
Again, leaving money on the table. So,
we
uh,
have a lot of we have a lot of software providers in the notary community.
good.
Nothing like QuickBooks, but we do have just profit and loss like accounting, not full cycle accounting.
Okay.
Like Notary Gadget, Notary Assist, Vim Books, specifically for notaries. And it
Good.
does allow us to tap into the mileage where you click a button there, say from your home office to the location and back. It calculated to a T. So if they do utilize that feature, I highly recommend, like what you said,
Absolutely. Yeah.
it's not like
Absolutely.
guessing, looking up into the ceiling, like, oh, it's accuracy. And it does the multiplication of what of the federal, mileage cart. So
Hmm.
absolutely. But yeah, I think the clarification was some people, I know you and me understand that, but I have a mobile office. Is that part of the home office deduction too?
Well, so the car would be separate, right? Your mileage would be something separate. You would not include that in your deduction for the home office. As a matter of fact, let me see, where am I at? I think I can share my screen.
Yes,
And if
sir.
we look at what's so here, right here, when it says figure your allowable deduction, these are the things here. We look at line 9 all the way down to line 25. These are the things that we can write off as far as the home office goes. We can see here we got mortgage interest on line 11, real estate taxes. There is insurance for those who rent. There's rent. You have repairs and maintenance, utilities. Those are the things that we'll use for the home. Did that show up on there? Yeah. So again, when we look at here, again, this is the form that everything will be on, form 8829. And then when we talk about part 2 is figuring it, going through it, you have the mortgage interest here. We have property taxes, insurance, rent, repairs, utilities, other expenses. And if we go down, and this is for those who own their home, there's depreciation of the home itself. But for the most part, the mobile office, we don't include the vehicle or anything like that. What we wanted to include again is just the what we see here. I'm saying it again, so I repeat myself, but just so we clear, mortgage interest, property taxes for those of us who own our home, utilities for those that rent. We have rent and utilities, so it depends. And what also is good to note here, if we look, we see an A and a B, direct versus indirect. Direct, say for example, in this safe where you have a room that's specific exclusive use. You have that room that's exclusively used for nothing else. Say something gets damaged in that room, okay, not to the entire house, just in that room. If it's in that room only, then that's going to be a direct expense. Versus if the roof got damaged and you had to replace the whole roof, then that's going to be an indirect expense. So we have to make sure that we identify them properly as well. And that's what we see here on the screen. So we have direct, it happened directly to that office space. We have indirect, where it happened to the whole house. And what happens with these indirect expenses, it gets prorated based on our business use percentage of the home. And that's what we did. This first part here is determining how much of the home do we use, right? Because obviously not all of the home is used for business, because there is some personal use to it. We sleep there, family gathering, entertainment. So maybe 20% of the home is used for business. So therefore, 20% of the expenses is what we're going to be able to write off. And all of that is figured right here between the direct and indirect. Obviously, direct, we get a little bit more because it happened in that space. Indirect happened to the entire property. So we're only going to get to use a percentage of it based on what we've determined it to be. But outside of that, we don't mix like the vehicle or anything like that. It's just anything that happened in that house.
No, that's definitely um a really great concept of what you just shared, which is on the screen. It's our banner 8829. That's
Yes,
something just to kind of study, right? Study,
absolutely. Absolutely.
see what you can. That's, we're only providing you information of being aware, right? Of home-based office, right?
Yeah.
Don't
Yeah.
let someone say that, oh, I can't write that off, right?
Yeah.
Well, tell
Yeah.
them about 8829 said I am, and it fits my notary business. And they're gonna be like, oh wow, like you just a different type of,
Yeah,
notary,
yeah,
right?
yeah. I mean, you want to be
Absolutely.
able to have these conversations with your tax preparer, right? Like if they're not taking the initiative to say, "Oh, I see you're a notary. Do you work from home? Let's see if you qualify." Then you should take the initiative to be like, "Hey, I noticed we didn't have this conversation. I do qualify, right? I do meet the exclusive use. I do meet the regular use. It was my principal place of business. Therefore, I want to take advantage of this. Now that you can now have that better conversation and making sure that you pay only what you're supposed to, not leaving no money on the table.
I think that's amazing. What about the squares? Should we like go around our house and like kind of measure,
Yes,
right?
that's next on the list,
Our
the record
space?
keeping. So you do need to measure, right? Because again, how this whole, now that we know that we can take it, we know what's use of it, everything is going to be based on the business use percentage of the home. Okay. So what you do need to know, and this is also going to be part of the record keeping, right? Because that's one of the biggest things, like, oh, I don't want to be targeted by the IRS. Don't be afraid if the IRS sends an inquiry. Okay, an
Mm-hmm.
inquiry is not an
Yes.
audit, right? I do want to make sure I understand that the IRS inquires about a lot. So if you ever get a letter in the mail, and I'm speaking from experience, right? I used to get letters in the mail when I first started as a tax preparer. I would get the letter, and my wife was like, "You got this letter from the IRS?" Oh, my soul would leave my body. Right, I would be so scared. I didn't know what it was. Like, we got to go through this again. I would stare at the letter. I'd put it on the table. I'd pace back and forth, get a drink, and then I'd open it up, and it'd be like, "Oh, here's your renewal." Oh, well, that was it. Something simple, right? But I understand how scary it is getting a letter from the IRS, but don't be afraid of it, because a lot of times it is something very simple. Okay. The IRS may be saying, "Yeah, we see you wrote off home office deduction. Can you send us something that shows where you qualify?" Simple. Okay. Here is how I figured out the percentage. You will need to know the entire square footage of your home.
Mm.
Then you will need to know the square footage of the space that's used for business. Why?
Hmm.
Because when you take the entire square footage, you divide it by the amount that was used for business, you get a percent. Okay, so if your house was, let's just say, 1,000 square foot home, and you used 100 square foot for business, well, then there's 10% business use. So now you get to write off 10% of the rent, 10% of the utilities, 10% of the mortgages, things like that. And that's how you show the IRS, this is how I came up with my calculation. And they say, "Okay, cool, thank you." That's it. But what happens when you don't respond? Now they be like, "Okay, well, you didn't respond, so we're going to assume that you didn't qualify. And if you didn't qualify, now we're going to take it off the tax return, and now you owe us X amount of dollars." And that's what we don't want, right? So anytime you get a notification, an inquiry, reply to it. Because I know Notary deal with paperwork, so you understand the importance of organization and paperwork. So I know y'all keep good record. I know you do. So as long as you got good records, you ain't got nothing to worry about.
No, that is nothing but amazing what you talked about. Keeping good records, right? Knowing the square footage, um knowing the actual proration of your bill. Why
Yeah.
not? Like, how is that tricky? Like, when it comes to home based office, is it just the square feet and knowing? Like, what if I live in an apartment? How do I know the square feet? Is there any, like, what if my
Good.
landlord doesn't know? Like, how do I get it? Do I go to Zillow and just
I
kind of
was, I
pick
was about
one
to
of the
say,
feet?
you can go to Zillow. You can utilize the website. The county assessor for most states will give a lot size, a layout. Property management will probably know it's probably in the rental application, because it should list the
Mm.
total square footage on there. If not, take a ruler. You can measure from wall to wall. Say, okay, it was 100 foot this way, 100 foot that way. When you multiply the two, that gives you your square footage. Right? Very, very simple. You multiply the length times the width, and there you have your square footage. And a lot of times you can take a ruler, you can use your feet, right? You can put 1 foot in front of the other as you walk down and kind of see, this is how many feet it is this way. This is how many feet it is this way. I'm gonna multiply the two. There's my square footage, right? So again, it's nothing to be afraid of, nothing to say I ain't gonna do it because I don't have these tools or I don't know this. Just get it done. Don't leave money on the table.
Oh my God, I love this. She said, don't leave money on the table.
No, not at all.
Oh my God. They said, I measure with measuring will. I have
Hey,
a measuring will. So,
hey, whoever said that is advanced. I will say that, right?
okay.
Because remember, I used to work in construction, so I had to measure the perimeter of home. So I have a measuring wheel too.
Oh
but that's
wow,
an
that's deep.
advanced, right there. So whoever that is, they good. They good.
That was Miss April. Yeah,
Hey,
she
Miss
said that
April, know what she talking about. We gonna
yeah, she
give Miss
had a
April a shout
measuring
out.
will. No.
Yeah.
I need to get one of those. I'm just going through and just kind of seeing what we have.
Okay.
Um, Okay. Mm-hmm. So I started my business last year. Well, um, well, that's not so much. We're going to talk about that a little bit later. Let's scroll
Okay.
a little bit. Um,
And while you're scrolling through getting the question, one last point I want to bring out too, if all of this substantiation record keeping is overwhelming, the IRS introduced maybe like a couple of years ago something called the simplified method, where
hmm.
you don't have to um, get all of this, do all of this math and figure out square footage, percentage, and stuff like that. Only thing you have to do is measure the space used for business. That's it. So
Mm.
if you're using a 10 by 10 room, well, that's 100 square feet. You take that 100 square feet, you multiply it by $5. That's the amount that you get to use for your business use of home using the simplified method. That doesn't require any substantiation, doesn't require any record keeping, doesn't require anything. It only requires that you know the square footage, and whatever that is, you multiply it by $5, which is the prescribed amount as of this conversation. And it's simple. That's why it's called the simplified method. You don't even have to use the 8829 to use the form. You just figure it out. Like, again, whatever square footage you used for business, multiply that times $5. That's your deduction.
No, oh my God, this is so helpful. Where can we get that? Like, for example, simplified method. Where can they look for that? Just type in IRS simplified method.
Well, that one is going to be on the instructions for the Schedule C, right?
Okay.
I think, as a matter of fact, here, let me put this out here. So here it is. You can see this is right here, the instructions for the Schedule C. And it's what page is this? It's down on page 12, right? You'll see it talks about there the simplified method worksheet, kind of gross income for any limitations. It's still going to be limited, but you can go right to the instructions for the Schedule C, page 12. There's a worksheet right there, and you can see it right now it's $5, but that's where you would find it at. And again, that one requires no kind of substantiation, no documentation. So if you feel like you don't want to go through all that, but you still want to take advantage, consider the simplified method. So yeah. Where's my schedule? See, oh, there it is. Okay. Oh, did I lose Renee?
It says, we have another great question. Can we use him as our personal tax preparer?
Man,
Right?
your favorite
Where
Uncle
can
Cousin
they
got your back.
find you?
Yes, man. If
Like,
you,
what
if
is
you,
the gems?
oh well, I love, yeah, absolutely. I'll be more than happy to help out. Your favorite Uncle Cousin. I'm here. You can find me online at my for education, right? My YouTube channel. You can go to YouTube, look at the Self-Employed Tax Guy for all kind of educational videos. There for the tax preparation. You can find me at the Self-Employed Tax Company.com. I know it's a long one, but very specific. I do this for the self-employed. So the self-employed tax company.com. Find me there. Find me on Instagram at the self-employed tax guy. So I'm here for you. I'm here to help whatever we can do, because we leave too much money out there for other people's to take, and we need to get it back, right? Because we got to build these businesses strategically.
No, absolutely. I put on the screen, I found your tab bio, right?
Okay.
Link that
Yeah.
does
Yeah.
everything, right?
Yes.
I can definitely put the website links in the chat also. But I thought that after I was looking at all of your contact information, I was like, I think I like this one out of all of them, right? Because
It
I was
pretty
just
much
like, you can
encompasses everything. Yeah. It does
yes,
accomplish everything.
absolutely. Yes,
Absolutely.
absolutely. So I'm going to also put the email because I know people like to reach out like right away, right?
Mm-hmm.
So I put the email right here on the chat, right? His contact information and his company website information.
Oh,
So
perfect.
you can definitely find him there and show some love. Put in the chat how much you really appreciated this.
Oh
Talking
man,
about
I appreciated it. You know, I'm always happy to help. I'm good. I'm loving the fact that we're having these conversations in our communities now, learning these things. The fact that we got people like Renee. You know, again, I gotta show you some love because you out here making it happen, out here grinding for people, showing them how to get it done, making it possible. You know, inviting folks like me onto your platform to help educate the people, man. So hats off to you because if we had more people doing things like this in our community, we would be in a much better financial situation, right? Because there is no difference between us and the wealthy except for what we know. That's it. That is absolutely it, right? I love the fact that somebody said, it takes the same amount of energy to make $1 billion as it does to make $1 million. The only difference is what we know. So if we put that to use, we be in a very good place.
oh my God, people are loving you. This was a really great session. They're saying this is very helpful. Thank you. They're saying this has been so
Oh
helpful. They're
man, well
saying thank you so much for the information. They're also saying I am so grateful for all of this great information. I think that you have nailed it, and this is just amazing. So I sincerely say thank you to the bottom of my heart to come in because at the end of the day, I am by the end of the day, I can say it, but it's better to have someone else say it, right? Sometimes
true,
it's better to
true,
collaborate because one
absolutely,
teacher is not the teacher for everyone, right?
right,
Sometimes
right.
people gravitate to other people, right? And if you're doing it specifically for self-employment, why not bring you on? It's silly to not do it, right?
Exactly,
Um,
exactly.
just praises. We have so many praises, okay?
Yeah, well, I
So,
appreciate people being here. They should, give a round of applause to themselves. I mean, because think about it. A lot of people, as opposed to coming on and getting this information, they'd probably rather be scrolling through TikTok right now. So for the people that's here, that's sacrificing their time to really learn this information, hats off to them too. So as much as they thanking me, I'm thanking them. That means you and I both, we're not wasting our time. We are actually surrounding ourselves with people who genuinely want to be successfully self-employed.
oh, for example, for real, keep our money in our company and just reinvest and bring investment and wealth. So
Absolutely.
I'm gonna let you go. Thank you, you guys. We really sorry about earlier the technology issue, but we are
It
here
happens.
now
It
and we had a
happens.
great session. All right,
Absolutely.
until next
Absolutely.
time, next week, week 3.
Week 3. All right. Yeah. Well, it won't be me, but from wherever. I know y'all gonna have fun. Renee, appreciate you. And anything we can do, let's make it happen.